Naveen Kulkarni now joins us on the show. Naveen, I'm pretty sure you're quite pleased with what you are seeing on your screens. And look at the commentary as well from Varun Berry. He's done the right things. He says that post the lockdown, or rather post the unlock, when unlocking started happening, they decided to increase their reach in rural and hinterland areas, which is basically what we'd like to see an FMCG company do.
Yeah, precisely. I think clearly what they have done is working. So strategically, I think they have made the right moves, and also it's showing in the numbers.
There is also this moderate inflation being witnessed in the prices of key raw materials. We just had the CPI number as well, so there was a little bit of inflation over there. In the midst of that, while I don't have the margin number handy with me, I'm just going to check if it's appearing on our screens. Yes, okay. 21% is the margin versus the ET Now poll, which pegged the figure only at 17 odd percent. What do you make of this big beat on the margin front and consequently on the profit after tax as well?
First of all, on the margin front, of course, it's a clearly major beat. But only thing that we want to understand is that how sustainable these margins are, because there was lockdown, there would have been stocking up of by customers, so on and so forth, which would have resulted in a major revenue beat, right? So, which of course results in operating leverage, and so the margin beat. So I would be very, very surprised if these levels of margins are going to sustain over longer periods, right? Because I think the revenue growth trajectory might come down from the current levels, right? That's one thing which can happen post, let's say, COVID period. But at this point in time, I believe that what they have reported is very, very strong. Question only will be what would be the normalized margins where would be even in this quarter, right? If certain things would not have happened. So probably we'll get some clarity from the management in the conference call today.
Actually a valid point you make. It's the leverage play as well that led to this big beat and the margins, this big expansion in the margin. What about top line sustainability, Naveen? April to June was the quarter where we did see a lockdown. We did see rampant stocking by customers on things like biscuits, amidst this lockdown. Do you think the spurt as well in sales could be something that could be restricted to the April to June quarter?
So margins, revenue, I think there is a bit of bump up which has happened especially in foods category as a whole, right? So my sense is that in a post-COVID scenario, this level of growth may not sustain. But having said that, I think still the underlying current seems to be pretty strong for the company. So the only question is that what is the excess number that we have witnessed in this quarter, whether it is a 5% or a 10% is what my question will be. However, still I believe that Britannia over the last few years has demonstrated very, very strong growth profile. So I won't be surprised if there are other things also which are playing out, like the unorganized market shrinking and Britannia gaining market share, so on and so forth, entry into new areas. So some bit might actually be sustainable. I think we will get some more insights, of course, one through the conference call and probably in the subsequent quarters.
Well, Britannia definitely has come a long way with Varun Berry last year, saying about how it's difficult to even get a 5 rupee packet to be sold, to the customer. And now, of course, this massive stocking up by customers amid the lockdown. Packaged foods, reputed brands like Britannia did see quite a high demand away from, the unorganized sector. That is something that has helped April to June quarter. Naveen, before I ask